Listen up, guys. I pulled an all-nighter researching these stocks that I have for you today, and I felt like I was back on Wall Street working for Goldman Sachs as a financial analyst last night, but I feel really compelled to give you guys some new stocks that are on my buy list that I researched, which will diversify your portfolio and give you massive gains this year. For each stock, I'm also going to show you guys a LEAP options play that I'm buying or selling right now. If you're new, my name's Henry. I worked for Goldman Sachs in private wealth management in Los Angeles, California. I've also had two different hedge fund jobs on Wall Street, one of them being an option trading firm, hence why I'm the most qualified YouTuber to teach you option trading. Let's not waste any time. Tap the like button, notifications, and do whatever you want with the subscribe button, and let's get you some money. So why do I mix in LEAP options with my picks? Well, because they greatly magnify your returns so long as the stock rises past your strike price. Buying a call option is betting on a stock rising, so a call option is just a contract that allows the buyer to purchase 100 shares of stock at a call option strike price. A LEAP is the same as buying a regular call option, except it's farther out in terms of its date. Option traders typically put on positions for 30 to 60 days until expiration, meaning that the stock prediction usually has to be exactly right within that time frame. But a LEAP option is superior to a short-term option because it gives you many months to work with, and during that time, the stock may have at least one or even two earnings releases, which is obviously going to move the stock, and it's going to be more beneficial because you have more time to work with. So that's why I'm going to give you guys some LEAPs with the three different stocks that I'm going to cover in this video. So the first stock is Home Depot, and I picked Home Depot. I did a lot of research into this company for two main reasons. For one, we have inflation rising in the US. One of the raw resources which has been tremendously affecting the housing market for buyers, builders, and everyone in between is lumber prices. And although the lumber market bubble recently popped, Home Depot is making money either way. And the proof is that Home Depot's first quarter same-store sales surged 31%. Home Depot Q1 sales and profits actually skyrocketed because of inflation. Second, if we see a stock market correction or sell-off, I guarantee Home Depot is going to do better than the general market. A stock market crash or steep correction has historically always been a smart time to load up your carts with Home Depot. I want you to guess why, or just let me know in the comments because I do read and respond to every single comment that is positive or a comment that asks a question. All right, you ready? The answer is because when the economy goes down, more people will do projects themselves. That means they will go to their local Home Depot and make more purchases for a project rather than hiring out labor and paying more for it. The great thing about Home Depot is that it can play both sides of the economy. If the US economy is firing on all cylinders, there's a good chance sales to commercial clients and contractors will be strong. Comparatively, when economic uncertainty becomes an issue, we will witness homeowners become greater customers for Home Depot. The company is surprisingly well hedged for virtually all economic scenarios, which makes this stock a very strong buy on my list. And last thing about Home Depot before I show you which LEAP options I'm looking at is their evolving business. Home Depot has invested aggressively in digitization. Though brick and mortar remains the core sales driver, Home Depot has seen an uptick in digital sales over the past couple of years. This seamless integration of the physical and digital experience should help it navigate any near-term market turbulence. Okay, here's which LEAP option I'm looking at right now. All right, guys, let's take a look at Home Depot stock real quick. And I have a specific LEAP option that I'm going to be buying for January 2022. I'm going to show you exactly why. If you take a look at this chart right here, and you take a look at May 10th, Home Depot actually had a short-term high at $341 per share. So I'm going to go to Trade HD Options, and I'm actually going to be betting that Home Depot will again go to at least $341 per share. But in fact, I think it's going to be much higher in January. Therefore, I'm going to be buying a call option and scrolling down to the January expiration, January 1st, 2022. And let's take a look exactly at how much a near the money option costs for the 340 strike price. So if you take a look right here, this call option is something that I'm really looking at. And the reason why I like it so much is the break even is $352 per share. That means that if Home Depot stock ends up doing really well, and let's say it retouches 340 per share, and my personal price target is maybe we can reach $400 per share. But even if we hit $380 per share by January, which would just be shy of a 20% return from the current price level, then what would happen is you would have $380 and your break even is $352. Therefore, you're gonna make about $28 per share, and that's gonna be $2,800. Since your investment is only $1,288, you're gonna more than double your money in the next 6 months with a Home Depot call option. What you need to happen is you need Home Depot to at least hit $352.95 to break even, and after that point, all of the money you're gonna be making is just going to be gravy. The next company I have on my list is a financials company. The reason I picked it is because financials have low price to sales ratios and price to earnings ratios. That means they're very protective to a portfolio even if a market crash or correction occurs. I picked US Bancorp after doing some heavy research into the banking space. This is a great segue to discuss the stock because I just mentioned that I like Home Depot partly because they're digitizing their business. I was very close to picking Bank of America and that came in as a runner-up. That's because Berkshire Hathaway owns over 1.03 billion shares of BOFA. Bank of America, or I'll just call it BOFA for short, stands to benefit from eventually rising interest rates by the Federal Reserve. Although I love BOFA, US Bancorp is digitizing their business faster. Even though bank stocks tend to get hammered during crashes or corrections, US Bancorp has proved time and again that it's in a class of its own among big bank stocks. It consistently offers one of the highest return on assets. Arguably, even more important to US Bancorp's success has been its ability to attract customers to banking digitally. In the May ended quarter, 80% of all transactions were completed digitally, which included just shy of 2/3 of all loan sales. The more its customers embrace digital banking, the more branches the company can close. That means their revenues will go up and their expenses will go down. That's going to be tremendously impactful for the business because that's going to increase the bottom line tremendously and make the stock skyrocket. Also, it offers one of the juiciest US big bank dividend yields of 3.4%. This is the perfect stock to sell covered calls on and collect a double dividend as I like to think about it. I have a video on covered calls that you should watch in my description if you want to collect huge dividends and make money selling covered calls. For US Bancorp, I'd rather sell covered calls than buy LEAPS for this one because it's a more of a protective play for the portfolio. It doesn't have as much returns, but it has a very high yield if you're willing to sell covered calls in 2021. All right, so now we have to take a look at USB or US Bancorp. If you take a look at the 1 month chart, it has hit a high of about $59 per share. And that was just recently on July 5th, which was last week. If I go to 3 months, this stock has been trending a little bit downward, which is actually a phenomenal thing if you're looking to purchase the stock and then sell covered calls. Because it's very likely that, again, this stock may reach $62 per share, but now you're getting a better price than when it was trading at back in May 17th. And if I take a look at the 1 year chart, I want to be really safe that what we're going to be doing is when you buy shares of the stock, you want to sell a covered call at just the peak price of the stock when it was trading at its recent high. So since US Bancorp was trading at $62 per share, I would love to sell a covered call because even if the stock rises to $62, I'm still gonna make money off of the option. And honestly, I don't think the stock is going to explode and go to $70. So you can't really lose with selling a covered call. The only way you can really lose is if the stock really pulls back. However, I don't see that happening because again, this is a protective stock. The dividend is massive. The dividend is 2.94% currently, but honestly, if you sell a covered call, you're gonna be generating more money from the option premium. So your dividend is basically going to be at least double. Now let's go to trade UBS options and I'm gonna take a look at January 21st, or is it January? Yeah, January 21st. I was gonna say January 22nd. January 21st, 2022. And this time I'm going to click sell call option. And now what I want to take a look at is rather than going for the $62 strike price, because when you sell a 60 strike, the actual break even is $62.19. And I just said the stock may go to $62, but I don't expect it to go way past $62. Therefore, the 60 strike is the perfect strike to sell a call option. Now the price for a call option is $2.19, which is just about 4% of the current stock price because 1% of $55 is 55 cents. 4 times 55 cents is going to be $2.20. And this is basically exactly $2.20. So you're going to be making 4% on the option premium in less than 6 months. Plus you also get to keep that dividend. Therefore, I think this is a fantastic play to sell a covered call. The third stock I have for you is Pinterest, ticker symbol PINS. And briefly working for a Google company myself and being a YouTuber and catching Snapchat stock early, I have a very strong understanding of social media stocks. Now, this stock is more of a growth play and we can make some fast money on it. Pinterest rose to prominence by bucking the negative stereotypes associated with social media and instead providing a dose of positivity. The platform acts as a visual discovery engine, encouraging users to find and pursue their passions. It's a digital repository where users find and pin things they're interested in from across the entire internet, motivating and inspiring them to take up hobbies, travel, new recipes, investing, and much more. I love how different Pinterest is from the rest of social media platforms. I think they truly have a unique position in the market and their business is differentiated. Spreading positivity has been very lucrative for the business. Now, revenue grew 78% year over year in the first quarter, and Pinterest cut its net loss by 85%. Its count of global monthly active users grew 30%, while the average revenue per user, or ARPU, was up 50%, guys. So much good stuff is happening for Pinterest, and this company is internationally expanding. It's the company's international results that should really give investors a lot of excitement. Now, foreign revenue and ARPU surged 170% and 91% respectively. Pinterest is building its international business following the strategic plan that works so well in the US. Focus first on the fundamental infrastructure and then build the user experience. Then you can scale and monetize every single user and make a pile of money. CFO Todd Morgenfield said during the first quarter earnings call that the company is running the same playbook and expects this already successful template to pay worldwide dividends in time. Even if the US has some difficulty with inflation or a market correction occurs, social media businesses will do well regardless. Diversifying into the global market is another strong reason that Pinterest is going to crush it with sales in the next few quarters. Management guided for revenue growth of 105% in the second quarter, and this helps explain the stock's 170% gain over the past year and gives us a very clear picture of its potential future growth. Pinterest is a stock that has shown volatility, and that's why I would actually prefer buying LEAPS on this stock. All right, let's take a look at Pinterest stock. So as you guys can see on the 1 year chart, Pinterest has had a double peak. One of the peaks was on February 16th, and the second peak was on April 9th. I actually believe that Pinterest has so much potential, and if this stock ends up breaking these two double peaks, it's only going to skyrocket towards $100 per share or even higher, because once momentum starts, it continues to build. And as you guys can see, we tried to hit another peak. It didn't happen. However, this time what's likely to happen is if Pinterest can show some good results, this stock is going to go to the moon, and it's most likely going to rise past $83 or $85 per share. Therefore, what I'm going to do is I'm going to be buying a LEAP option again for January 21st, 2022 at the $85 strike, and I want to show you guys exactly what the break-even price will be. All right, guys, so check this out. This is a perfect example. If you take a look at the 85 strike, the call option premium is $5.50. Therefore, your break-even price is $90 per share. Now, if Pinterest were to hit $100 per share, you're actually going to have a $1,000 profit on your hands, because $100 minus 90 is about 10 times 100 shares for each option contract. Each option contract's 100 shares. You're gonna make $1,000, or you're gonna make a total of $1,500, but when you subtract the premium, it's $1,000. Now, if you take a look at the math, when you make $1,500 on a $500 call option, you're actually gonna be ending up tripling your money. So this is a triple your money play. So that makes Pinterest the highest growth opportunity that I have in this video for you. If you do want to learn how to produce consistent weekly income and create cash flows safely without taking a lot of risk or waiting impatiently for a single stock to grow, then definitely check out the link in the description to the brand new Option Income Academy, where I go over my option calls, picks, and plays in real time, breaking down my full thought process. You will also get very hands-on access to me and my team of 6- and 7-figure coaches. Click the application link below to see if you qualify for some free training. And as always, guys, be aggressive in learning, but be safe investing.
No one ever sees me.